Dear traders and investors, welcome to Felix Research. The topic of today's webinar is trading structured warrants. Here are the main contents of today's webinar, which we would be covering in detail further. The first topic of today's webinar is what are warrants? In simple language, we can say that warrants are a certificate, a coupon, or a token issued by a firm which gives holder a right to either buy or sell company's equity at certain price in future. Well, unlike stocks, the warrants are not issued by the exchanges. They are issued by the firm or a company. The main purpose for issuing the warrant is to raise money. So whenever a company comes up with the idea of giving the warrants or issuing the warrants, or they want to exercise warrants, what they do is they the company's total number of shares increases, which in returns help the companies to dilute their earnings and help to get in more money. Now, the two main types of warrants are call warrants and put warrants. Now, as explained earlier, the warrants are issued by the third party or the firm and not by the exchanges. So in the same way, call warrants are also not issued by the exchanges. They are issued either by the firm or a bank or third parties. Now, when we are talking about call warrants, the most important thing we need to understand is that the relation between call warrants and mother share. So the mother share and call warrants are directly proportional to each other. Or we can say that call warrants move in the same direction as the direction of its mother share. So whenever mother shares start to move up, you'll see that the call warrants of that mother share will also follow the same direction. So when mother share moves up, call warrants also moves up. In the same way, if mother share starts to fall down or takes a reversal, the call warrants also follow the same direction of its mother share. That is, it starts to fall down when mother share starts to come down. Now, put warrants, as uh, as we can say that put warrants is just the opposite of call warrants. That is, put warrants are inversely proportional to the movement of its mother share. So whenever mother share, if you are talking about put warrants, whenever the mother share starts to move up, the put warrant starts to come down. And whenever the mother share starts to fall down, the put warrant starts to move up. Well, as explained earlier, the warrants are not issued by the exchanges. The warrants are issued either by a parent company, a third party, or by banks or security firms. Now, when we talk about Bursa Malaysia, whenever any warrant which has been issued by its parent company, the name of the warrants add with an alphabet W. So you could see certain warrants, the ending would be like WA, WB, or WC, depending upon their different gearing effects. So it will make you understand that if you go through any of the warrants which starts with W, it's been issued by its parent company. Well, and again, in Bursa, you may find different warrants ending with different alphabets. So whenever a call warrant which ends with an alphabet C, okay, that means that those warrants are not issued by its parent companies, but are issued either by a third party or by a bank. Now, when it comes to put warrants, you know, the put warrants has been explained to you in the earlier slide. Whenever you see any warrants which ends with an alphabet H, it means it's a put warrant, and you need to understand that it will move opposite to the movement of its mother share. Now, here comes the main question: why one should invest in warrants? Now you might be asking that we are already investing a lot in this stock market. We have a lot of holdings. We have a lot of shares with us. We are already taking a risk when we are investing in the stock market. Why to shift into a new product? Or why to shift into a new thing and get exposed to a new kind of risk? Well, the main purpose or the main benefit of playing or trading in warrants is that if you compare it with the mother share, or if you compare it with trading in the stocks, you'll find out a significant difference in the returns provided by each of them. The warrants will provide you higher returns, a good profit, more than its mother share. Though the risk involved in trading in warrants is slightly higher than the risk involved in trading in stock. Now, as explained to you in earlier slide, that the main reason or the main purpose to trade or the main advantage to trade in warrants is that it provides us a greater opportunity to maximize our profit. That is, an trader or an investor can trade comparatively much more in warrants as compared to trade in stocks with the same investment. Now, here is an example which will clear this reason why one should focus on trading in warrants. So let's say if there is a stock ABC whose price is ringgit Malaysia 3.75. That is, when it was closed during the market hours, its price was 3.75. It's a mother share ABC, and at the same time the value or the price of the stock ABC warrant is 0.89 ringgit Malaysia. Next day, when the market opens, there is a movement of 32 cents in this stock. That is, stock has reached to the level of 4.07 from 3.75. So there is a gain of 82 cents. That means in percentage terms, it's 8.5% of profit. Okay. Now, when we look into the warrant of stock ABC, its value on the prior day was 0.89, and once the market opens on the next day, it moves to 15 cents. The mother share moves to 32 cents and the warrant moves to 15 cents, and its price comes to 1.04 Malaysia ringgit with a percentage gain of 17%. So you can clearly see the big difference between a trade made in a stock or a share, mother share, as compared to the trade made in the warrants of the same stock. The stock moved 8.5%, whereas the warrant of the same stock moved to 17%. So clearly there is a difference of gain of 100%. Stock is giving you 8.5% of return, whereas during the same tenure, the warrant is giving a return of 17%. Now, when we talk about the warrants and its mother share, they move in the same direction when it comes to companies issued warrants. That is, once the mother share moves up, the warrant will also move up. Okay. Now, you can also see the difference in the prices. If we are trading in mother share, okay, the value of the mother share is quite a lot. It's 3.75. But if you look into its warrant, the value of the warrant is quite less as compared to its mother share. It's 1.04. Now, since we are getting a very cheap price for warrants, it also helps us to leverage our investment. That is, even with the smallest of investment, we can make a good percentage of profit. That's where warrants have a real edge over the stocks when it comes to trading. Till now, we have been discussing about the company related warrants. Now, there are another type of warrants which are being talked about in Malaysia these days, and those warrants are known as structured warrants. Now, let's see what are structured warrants, what are its features, how are structured warrant different from the company's warrants, and what are the benefits of trading in structured warrants. Now, as we have discussed earlier, that the company warrants, also known as ordinary warrants, they are issued by the companies as a fundraising exercise. That is, the companies themselves, they come up with the idea of issuing warrants. They issue the warrants with the purpose to increase funds for their companies and business. When we talk about structured warrants, the structured warrants are not issued by the companies. They are issued by third parties known as issuers. Mostly they are the investment banks. If we talk about Malaysia, the Macquarie, they are the ones those who issue the structured warrants in Bursa Malaysia. Now, when we talk about structured warrants, the traders, those who are having small capital or those who are having limited resources when it comes to trading, they get an opportunity to invest in the market because structured warrants, they bring in wider choice of the companies to invest in, or they have different options, different platforms, different trading instruments to invest their money in. Mostly they can do for earning profit in short term, or they can invest in such warrants and go for hedging exercise. Now, let us go through some of the features of the structured warrants. The most common feature of the structured warrants is that similar to the companies issued warrants, structured warrants also have call and put warrants. Now, we have covered the properties of call and put warrants in our earlier slides. So, the structured warrants are nothing new when it comes to the properties of call and put warrants. Call warrants move according to the movement of the market. Like they move up when the index move up or the market moves up, and put warrants are inversely related to the movement of the index or warrant. Put warrants move down once the index moves up, and when the index moves down, the put warrants move up. Now, another feature of the structured warrant is strike price. Now, strike price is nothing but it's a introductory price of a warrant. when issuer or the third party or an investment bank decides to come up with a structured warrants, the price which has been determined in advance or the introductory price of that warrants is known as strike price. The next is expiry date. The structured warrants come up with a limited lifespan. That is, the trading has to be done within that tenure which has been stated in the contract, and the last date of the contract is known as the expiry date. And once that reaches, uh, the warrant will expire or lapse. Now, let us go through the benefits of trading in the structured warrants. That is, what all advantages a trader or an investor will have once he or she decides to go for trading in structured warrants. The first one is lower capital outlay. Now, lower capital outlay refers to that even if an individual who is having limited resources while putting his money into the trading, the structured warrants provide an advantage that with the limited resources and with limited funds, one can easily trade in the structured warrants because generally the value of the warrants are very less, and thus it provides a good opportunity for small time traders to get the benefit of the market and can make money, good money, even with the limited funds. The next is portfolio protection. Now, as we know that structured warrants come up with two different types of warrants, that is call warrants and put warrants. Now, whenever you know there is a downslide in the market, or the market is not performing according to the expectation, or market is not bullish, even then the structured warrants provide an opportunity to make money. One can trade in put warrants, can use hedging, and can make money, because as you know, when the market is bearish, the put warrant starts to move up. Third one is no more margin calls. Now, unlike trading in CF, CFDs and trading in stock or trading in any share, we need to come up with certain margin calls. But structure warrants, for that we don't need to give in any margin calls, and without that we can easily trade on structured warrants. Liquidity. Now, since the structured warrants are being issued by third party, uh, there is no issue related of volume, or there is no issue related to liquidity. The buying and selling can happen easily, and it also helps uh, to reduce our chances to getting stuck in any position. Now, the next set of benefits or the advantages for trading in structured warrants are diverse market access. Now, structured warrants provide a greater opportunity to trade or make money while trading in different instruments. Like when one trades in structured warrants, he can make a trade on a stock which are being issued by the company, or the trader can also take advantages of volatility which is happening in the index. Next is downside losses capped at invested capital. Now, since we know that the value of the structured warrants are very less, so even if there is a loss happens while trading in structured warrants, it won't be a much bigger loss in terms of money value as compared to the losses made while trading in the stocks. Leverages. Now, structured warrants give a greater exposure to the traders, because whenever we are buying any structured warrants, and as mentioned earlier, the value of the structured warrants as compared to the stock or a share or an equity is quite less. So let's say if somebody is having an investment of 10,000 Malaysian ringgit, with that 10,000 Malaysian ringgit, the number of units which could be bought while trading in structured warrants is much more, or could be much more than the number of units with the same amount could be bought while trading in stock or an equity. So thus, this provides a better opportunity to make profit or to have a gain in terms of percentage. Now, just like any other financial instrument, structured warrants also come up with certain risk. As you all know, whenever we are trading in market or we are making any trade in stock market, you know, there is certain risk which we should be aware of and we should take care of. In the similar way, structured warrants have certain risk. The first one, or the most common one, is limited lifespan. As you know that structured warrants comes up with with an expiry date. The warrants get lapsed during the last date of the contract, known as the expiry date. So we need to be aware of the expiry date and the tenure left for the contract while making any entry in the structured warrants, because we cannot carry forward or we cannot hold the warrant after the expiry date. So the losses which have been there, we need to bear those losses on those. Next is the market risk. Unlike companies related warrant, most of the structured warrants are issued for the indexes, whether it's for Hang Seng Index or whether it's for Bursa Malaysia Index. Now, since the structured warrants, most of the structured warrants are traded on index, we need to be careful about the volatility of those index, and thus the risk factor as compared to trading in stocks or in equity is little bit more in structured warrants. So here are some common differences between structured warrants and company warrants. We have covered all the points of differences in our slides earlier. Here it's a quick review about the differences and advantages of each warrants over each other. Like if you talk about structured warrants, when it comes to lifespan, the lifespan is shorter as compared to the company warrants, that is the expiry date as compared to the company warrants is shorter in structured warrants. So company warrant has certain advantage in this aspect. When it comes to issuer, structured warrants have certain edge over the company warrants since they are being issued by the third parties. In the same way, there are certain advantages which company warrants have over structured warrants and structured warrants have over company warrants, which have been covered in this slide. Thank you. So this was all about trading in structured warrants. We hope that you have some fair picture of warrants now with this webinar. Soon we will be coming back with a new topic of webinar. Uh, the topic would be, or the webinar would be conducted on Malaysia Budget 2019, wherein we would be covering up the impacts of the budget on the Malaysian economy and the stock market, what all precautions we should take after the budget, uh, what all sectors would be looking potential, what all sectors should be avoided while picking up the stocks. So we will be covering all the things in details, which will help you to strategize your trading for coming months. Thanks for your time and patience. You can also follow us on Facebook and Telegram, where we
continuously post updates, and you can also see few of our stock selection over there. Uh, Looking forward to catch you with new webinar. Thank you. Thanks a lot.